Good afternoon, everyone. Welcome to this Simply Services session. At the outset, let me clarify that this event has been organized under the WTO Secretariat's own responsibility and is without prejudice to the positions of members or to their rights and obligations under the WTO. As you're aware, Simply Services is a trading services speaker series introduced back in 2018 by the Trading Services and Investment Division to bring together services experts to discuss the latest trends in services trade. This session is held in hybrid form, so in person here in the WTO premises and through Zoom. The session will be held in English as usual. However, in addition, in order to facilitate the launching of the World Bank book, the World Bank is providing interpretation into 4 regional languages: Bahasa Indonesia, Chinese, Thai, and Vietnamese. So these additional channels are available to those joining the session through Zoom. And also here on the floor, if a question later comes through any of those channels, so please make sure that you select the right channel. I am glad to be moderating this session today, and what a special session this is. This is a very important and timely study. This report sheds light on an often unappreciated driver of growth and job creation in East Asia and the Pacific: services. There are very good reasons such as demand factors, demographics, climate transition, digitalization, and servicification to anticipate that the importance of services will continue to grow in the coming years. This makes it even more important to delve deeply into the drivers of services growth, the contribution of services to development, and the policies required to maximize development benefits while taking care of challenges. The report is not limited to a review of facts, as you will see, but constitutes a solid and provocative piece of policy-oriented research within an original conceptual framework. And while focused on the East Asia and the Pacific region, the analysis and the policy recommendations may prove pertinent to other economies in their services-led journey towards development. I said this is a very special session for another reason. It is the actual launching of this report. This is the first in series of events that will be later organized by the World Bank to launch 3 other reports covering other aspects pertinent to the region, such as firms and productivity, jobs and technology, and decarbonization and green technologies. So we are pleased to provide our space here in Simply Services for the launching of this interesting World Bank report, Services Unbound. Here with me today are the main authors of the report: Aditya Mattu, Chief Economist of the East Asia and the Pacific region of the World Bank; Alessandro Baratiri, Senior Economist in the same World Bank department; and as discussants, we will have Pakuan Chuensuvankul, Counselor at the Permanent Mission of Thailand to the WTO and Services Negotiator of Thailand here in Geneva; and Gabriel Bautista, Minister and Deputy Permanent Representative of the Philippines to the WTO and also Services Negotiator here in Geneva. So without further ado, let me pass the floor to Aditya and Alessandro for their presentation. Right after, we will turn to Pakuan and Gabriel for their comments and observations, giving their own perspective, their country's perspectives on the issues. And finally, we will open a Q&A time for everyone to interact. So Aditya, over to you.
Thank you very much, Juan, for giving us this opportunity to present this new report. It is always an honor and a privilege to be back in the World Trade Organization, where I had the good fortune of working. And so, as Juan said, this is a first serious treatment of services and development in the East Asia and Pacific region. We know that East Asia and Pacific countries, many of them, have made a remarkable transition from commodity production to manufacturing production, and that has taken them from low income to middle income status. Many of now legitimate aspirations to become high income countries. And it is increasingly apparent that this next transition will depend on their successful engagement in services. While this institution had the wisdom to think of trade in services broadly, encompassing the movement of capital and the movement of people, this report takes a step further in seeing the broader reform agenda, which will ensure that services contribute to development, and which you will see is intimately linked to your work on trade and services. Let me begin by presenting 4 stylized facts and a framework for thinking of how services can contribute to development. First, conventional wisdom is that it's manufacturing that is really the engine of growth. But one of the findings we would like to share with you that in this region, where manufacturing has certainly been the prime protagonist, much of the productivity growth in recent years has in fact come from the services sector. Francine? It's here. This happens with a lag, so I have to synchronize my presentation with what I say. So as you see, in most countries in the region, in the most recent years, that purple patch, quite literally, is services contribution to growth. And even in countries like China and Vietnam, the biggest contribution to productivity has come from the services sector. That's fact 1. Fact 2, we often have a sense that services lag behind in their global integration. Strikingly, the growth of foreign investment in services has been as much as 5 times faster than the growth of foreign investment in manufacturing. And similarly, a sector regarded as non-tradable today shows rates of growth of exports which are in many countries faster than those of the rates of growth of manufacturing exports. Now, Vietnam stands out. Vietnam is the factory of the world. But even in Vietnam, when you take a closer look, some of the most exciting developments are in the services sector. There is a firm that we had the pleasure of interviewing and talking to. It's called FPT. It began life as a small firm with a few employees and has now become one of the biggest exporters of software services in the world. It exports technical services, research and development services, and a range of other services. And I love this picture because this picture is of a branch of FPT in India. The heart of the whole services export movement is now hosting a Vietnamese firm which has tremendous ambitions and is growing in terms of both the size and the scale of its services activities. The third stylized fact is a little bit self-evident, that services sectors are heterogeneous. They're very different. You have everybody from a truck driver to a software developer, but on general, services tend to be more skill intensive. This matters because that will also determine the kind of demand for workers that's likely to come in this new services economy. And the final fact is, in a world that is obsessing, or until very recently was obsessing everywhere about climate change, services tend to be much cleaner than agriculture and industry. But then there is again an exception. Transport tends to pollute. Each of these dimensions is relevant to how we think of the development dimension of services. But what we propose to do in this report, I think what is disconcerting is not the lag, but the fact that the lag is not uniform. So now this framework that we have in mind brings together two striking developments at this point of time. Why now, you might say? Because first of all, technological change is transforming the way of delivering services, both in terms of making digital delivery possible and transforming the business models. At the same time, there has been policy reform in this region, but both are incomplete. What we show is that the reform that has already taken place has led to big increases in productivity, not just in the services sectors, but also in the downstream manufacturing and agricultural sectors that rely on telecommunications, finance, transport, logistics, legal services. When all these services improve, productivity increases not just in those sectors, but also in the sectors which use those services. And that transformation has also changed the demand for skills. These services are becoming more skill intensive. And that leads to enhanced economic opportunities. You must remember that in many countries, including my own, if you produce a lot of skilled people through better universities and they have no jobs, the incentive to acquire jobs, incentive to acquire skills is diluted. So one of the remarkable features of this services reform and technological change is stronger incentives for people to become skilled. But that's not just it. At the same time, the reform and digital delivery has enhanced the capacity of people to acquire skills. Better education, better health means people are now equipped to take advantage of these opportunities. So the beauty and the power of this services reform and technological transformation is that it creates a possibility of a virtuous cycle between enhanced opportunities and enhanced capacities. And a result of that virtuous cycle is higher growth and better jobs. So the three questions that we address and which we are going to discuss is first, what is happening? Why does it matter? And what needs to be done? And these are the questions I pose to Alessandro.
Merci, bon après-midi, buenas tardes. So we cover all the languages
But not
of the
Chinese and
WTO,
Bahasa.
the official languages of WTO. So my role now is to convince you that he didn't lie to you in the last 10 minutes. So I'll show you some evidence about the first two questions. So what is happening? So as we said, the walk we are taking you through this afternoon is based on two main legs: technological change and policy reform. Let's start with the first. Now, it is fair to say that digital technologies are changing services market as well as our lives. There is no need to data, but just a self-reflection to understand that how we shop, how we pay, how we communicate, how we travel has been deeply impacted by digital technologies. This is not just a feature of the developed world, in East Asia and Pacific as well, even more in certain aspect. The digital economy is now booming. Across the region is now placed, according to different measures, between 5 and 7% of GDP. This is the gross market value of the digital economy. A second way in which you can see how this is important is that if you look at the destination of the venture capital funds, for a recent year we had the bank, in Thailand, the most of the funding goes to telecom, fintech, e-commerce. So if from the one hand you have this boom, an important caveat that we stress at the very beginning of the report is that this is not for everyone. Does it mean that there is a lot of heterogeneity of access to this boom across geography, income, and education? Here you see the urban-rural divide in terms of internet access to some of the countries of the region. You see that in some cases, this is not as big, like Thailand. In some others, Vietnam, Philippines, much more pronounced. And most importantly, education. So here you see the access to internet by the different level of education. As you can see, obviously, people with tertiary education, who are also the richest one, has much more access to internet than the people with no education, but these differences are stronger in some countries than others. So on one hand, digital boom, but with the caveat of unequal access. On the other hand, partial policy reforms. Here is really a celebration also of a collaboration, and I say more of the friendship between these two organizations. So this is in fact a WTO World Bank developed index, which is called the Service Trade Restriction Index. It's simply an index that goes from 0 to 100. You can read in the book the details, but 100 is the most restrictive regime, 0 is the most liberalized regime. You see these many points referring to the level of this restriction around 2008 or in blue, and the level of this restriction in 2016 in yellow-orange. You do see that on average, the world has experienced some partial reforms, and in particular also countries in our East Asia Pacific region did experience some partial reforms. Why are these two trends important? Three things: higher productivity, better jobs, and improved access to services, as Aditya was mentioning before. So let's start with productivity. Here we'll bring you through a tour of the region. So the first deep dive we have in the report is about Philippines, where with detailed firm-level analysis, we showed a few things. So first, the adoption of digital technologies is more pronounced in services firms than it is in manufacturing firms. Second, among those firms who employ digital technologies, those firms who are foreign-owned are actually more prone to use these technologies than the domestic firms, and those who have access to fiber broadband much more so than those who do not have access. But most importantly, these digital technologies are actually impacting productivity. The headline number is 1.5% per year in the period 2010 to 2019. If this seems to you arid numbers, imagine something as simple as an inventory management system and how a firm can differ if it runs it in a traditional way with pencil and paper or in a digital way, right? So you can visualize how this increase in productivity comes from very, very tangible things. How about services reform? Now let's move from Manila to Ho Chi Minh to get into the second deep dive of our report, which is in Vietnam, where we actually explored how the reduction in the barriers to entry and competition in the services sector increased labor productivity, both of services firms, and here the headline number is an increase of about 2.9% yearly from 2008 to 2016 in the services sector. And most interestingly, perhaps, we see that the same access to better intermediate inputs, for instance, has created the possibility for downstream manufacturing firms, that is to say, the firms who use these services as intermediate inputs, to increase their productivity. The headline number being 3.1% increase in productivity, in labor productivity yearly from 2008 to 2016. And as you can see here, particularly interesting that the results are driven by private firms, small and medium-sized enterprises. So second, jobs. Now we move from Ho Chi Minh to Jakarta, and we have the third deep dive analysis in the report. We're now looking at individual level data from labor surveys. We can look at the division of jobs into different types, particularly non-digital informal jobs, non-digital formal, digital informal, and digital formal. And as you can see, precisely the digital formal jobs are the one that requires the higher skills. And these jobs, not surprisingly, are concentrated in services, professional services, finance and insurance, ICT. Deepening our analysis of these workers, we also look at the profile of their wages. And there we discover that digital jobs earn a wage premium, interestingly, both in formal employment and in informal employment compared to non-digital jobs, and that these wages are actually increasing faster with tenure at the firms. You see here the red and orange line steeper than the blue lines. So productivity and jobs, clearly a big question is about another dimension, incarnation of digital technology, which is AI, is going to affect the quality and the quantity of jobs in the future. So here, one other interesting case, we sat down with Tata consultancy firm in the Philippines, and they let us understand that at least is fair to say that AI will also increase some tasks, right? And they were mentioning to us how much customers are then asking to them AI-related solution, and how much they had to upskill their staff to respond to these customer needs. Third pillar of why these two drivers are important is access to services. And here we want to just explain you how important was the combination, not just of policy reform, but of digital technologies in helping our countries increase the access and the quality in education. So here in the book you can read, we'll survey a large set of studies where the use of digital technology in the classroom has had positive effect on the results of students in standardized tests. Telemedicine. So here, an interesting study in the Henan province of China shows how the use of digital technology in health is increasing the access to health, is increasing the quality of the cure, and also the satisfaction of the patients. And last but not least, obviously, fintech. The East Asia Pacific has been a hero in the increase in access to fintech. And so here, even in the countries that looks less brilliant, obviously, you know, China, Thailand, Vietnam, these are examples everybody knows. But even in a place like Cambodia, we sat down and we discovered how interestingly the largest bank of Cambodia, who is owned by a Canadian bank, was able through these linkages with foreign expertise to introduce new technologies, which actually went a long way in easing the way in which Cambodian people can actually pay, for example, for their cars. The example they made us is that they took if the dealer is in front of the bank, you go to the bank, you take the cash, you go to the dealer, you pay the dealer in cash, right? So, you know, these obviously slow transaction and productivity. So let me recap how I tried to answer to the two questions posed by Aditya. Then we did talk about the evidence on technology and policy reform. We did talk about why this matters, which is an increase in productivity, which is associated to an increase in the demand for skills, and an improving access, which is also associated with an increasing supply of skills through health and education. And obviously now the big question remains, how do we harness these policies to have this interplay between enhanced opportunity and human capacities? And so here, back to the one and only Aditya Mattu, the question is, what needs to be done?
Thank you, Alessandro, for that compelling description of why this matters. In terms of both policy reform and technological development, a lot has happened, but a lot remains to be done. We think of three balancing acts that the policymakers have to strike. One is between liberalization, which is unfinished business, but at the same time, the need to strengthen regulation. Second, to deal with these big gaps that exist in both skills and infrastructure through an appropriate balancing of public action and private enterprise. And the third is to complement the unilateral reform that we have seen through international cooperation, including in this institution as well as in regional fora, because that international cooperation can both catalyze and complement unilateral reform. As Alessandro showed you, there has been a lot of reform, But this region that has thrived through openness to trade and investment in manufacturing remains a reluctant liberalizer in services. It is, again, very important to think of what are the barriers and what is the rationale for the barriers. In telecom, finance, transport, there are opaque licensing requirements. There are restrictions on entry and operations of foreign firms, and data flows across countries, which are the lifeblood of this new digital economy, are increasingly subject to conditions and restrictions. But even these gold standard regional agreements like the CPTPP and the RCEP, when you look at them closely, they have delivered valuable security of access in terms of bindings, but they have not necessarily delivered greater openness. One should recognize, of course, that in countries like Malaysia, some liberalization, say in the financial sector, was implemented on the altar of the negotiations. So finally, when you compare the legal binding with applied policy, there may not seem to be a big difference. Secondly, there are countries like Vietnam which pre-committed to liberalization. So one should not completely underestimate the value of these negotiations, but it is true they have not been powerful liberalizing instruments. That does raise the question of how we might rethink services negotiations, where we have a greater role for regulatory cooperation rather than just the conventional, you open your market, I'll open my market. Apart from liberalization, it remains hugely important to continue regulatory reform. As with reality, so in the presentation, there is often a big lag between liberalization and regulatory reform. Will it ever come, regulatory reform? I think perhaps we need to imagine regulatory reform. So the example that I was going to give you is of Indonesia. Indonesia is a country which has eliminated a lot of restrictions in transport services, allowing foreign investment in logistics services. But one consequence of that reform is there is greater scope for foreign competition, foreign investment, but national regulation. I'm surprised that all of you are looking with such interest to this slide, which you have already seen and not listening to me. But there has been really a problem in Indonesia is the fragmented regulation. There are 4 different ministries which look after logistics. So even though in principle you have scope for greater competition, in practice that competition is inhibited in a fragmented market. The second point, as I said, is the question of dealing with these big gaps in human capital and infrastructure. Now, this region is regarded as a tremendous success in terms of its ability to create human capital. But the truth is, it has feet of clay. New work we have seen shows that in basic education, a country like the Philippines, which is a leader in services exports, 90% of children under the age of 10 cannot read and understand an age-appropriate text. In Malaysia, which is on the verge of becoming a high-income country, 40% of children cannot read and understand an age-appropriate text. So the foundations of skills are weak. Digital literacy is also weak. And finally, management capacity is inadequate. So when you put these 3 dimensions of human capital together, there is clearly a big gap in this convergence to high income status. And finally, when you think about infrastructure, now, the mobile revolution has dramatically improved access to the internet. And mobile telephony is a miracle. But for a lot of these new technologies, the AI-related technologies that Alessandro talked about, or using cloud, you need broadband. and broadband still needs fixed networks. Now, this bandwagon that we all rode, including at the WTO and the World Bank, where we celebrated the spread of mobile, hasn't yet come to terms with this question that if you really need broadband to equip firms all over countries like Philippines and Indonesia and Thailand to access these new technologies, is the private sector alone going to deliver the necessary infrastructure, or do we need to think of other mechanisms of the kind that you talked about in the WTO, like universal access funds, where the public sector contributes or procures from the private sector in a way that improves access without sacrificing competition? And the final point I'd like to make is that even though much of the reform in services has come unilaterally, and even though I worked in this organization, I don't think we can take much credit for changing policies on the ground. The truth is that potentially there are big benefits from international cooperation. For example, as I said, data needs to flow within and across countries. But countries in this region, as in other parts of the world, are increasingly creating strong conditions on data flows. How do you deal with the legitimate need to protect privacy, to protect people from cyber fraud, without impeding the flow of data? And it is through regional cooperation. And here it's wonderful that the ASEAN countries have a new digital initiative which conceives of broader cooperation to deliver better data access. And the final example of international cooperation, as I said, is that we have talked about maritime transport being polluting. And one way to deal with pollution is through international cooperation. Now, the International Organization of Maritime has developed some rules to try and reduce emissions in transport, but here again, there is a tension. If those rules lead to higher costs of transport, what does it mean for remote countries in the Pacific? So again, this tension between dealing with emissions and dealing with development needs to be resolved in a way that we can get a better climate, but also not sacrifice development. So having said everything of interest to you without the presentation, let me conclude with this.
Which means that they will read the book with a lot of interest, because the charts were amazing.
Okay, but it doesn't matter. So the question is, but I'd also need the control, or is it?
I'll do it.
Is it separation of control and authority?
I can do it.
Okay. So this is a picture which basically brings our main framework back together. Countries begin with low opportunities and low capacities. If you get, as in the case of, say, a country like the Philippines, where there's low educational capacity, but high opportunities because it has moved into this whole services export world, you can get shortages. You don't have enough skills. Then there are other countries which have created a lot of skills. A country like China, for instance, has, through its universities, created tremendous skill capacity. But sometimes those opportunities do not exist, or other government actions, for example, to regulate the digital areas, have stifled some opportunities. So you get underemployment or excesses. Ideally, the path to development is a virtuous path which balances opportunity and capacity. And one way to get a global sense of where countries are is this picture that we have created. And here you see that countries in the region, and again, I keep emphasizing the region, but as one philosopher who's currently out of fashion said, the more advanced country shows to the less advanced country a picture of its own future. So a lot of these conclusions are relevant for all countries in the region. And you see Lao PDR and Cambodia are, in a way, examples of countries which are low today in capacity and opportunity. When you look at a country like Vietnam first, it has moved along, enhancing both. And there are Malaysia and Philippines, which I would put in the high opportunity, still constrained capacity, which is why a lot of smart Malaysians don't stay in Malaysia. They go to Singapore. So the question there is, why isn't Malaysia able to create those opportunities which retain the skills? Philippines, as I said, there is a huge capacity problem. When you turn to Thailand and China, amazing successes in skills, capacity, but where are the opportunities? And finally, as I said, there are countries like Singapore and Australia which seem to have succeeded in this balanced growth in both. And those are the aspirations for all countries in the region. Final picture of what might this public-private partnership mean is from, again, the first example I gave to you of FPT in Vietnam. Now, this is a company, and Vietnam itself is a very interesting story. Vietnam has the best school system. Vietnamese children do better than Canadian, American, English students in school. But then there is a precipice because the tertiary system, the universities are really weak. But as I described this FPT as a leader in software development, what has it done? It has created its own university. In a way, it's internalized opportunities and capacity. Now, how much can be done by the state and how much will be done by the private sector is an open question. It's not an ideological question. But there is a, to use a phrase also by this out-of-fashion philosopher, there is a possible dialectic relationship between the public and the private sector, which could lead to the kind of virtuous cycle that I'm talking about between opportunity and capacity. Thank you very much for your attention and thank you for coming here. But now I have provoked our discussants sufficiently, I hope, for them to respond in kind. Thank you.
Thank you very much, Aditya. Apologies for this technical hitch. Okay, let me now turn to our discussants. First, of course, we will give the floor to Pakuan Chuen from Thailand to give us a perspective from Thailand on these issues addressing the report. So Pakuan, please, the floor is yours. I understand you have a presentation, right? Okay, let's try to make it work.
Keep your fingers crossed.
Thank you, Horn, and thank you very much, Aditya and Alessandro, for giving us the insight of the report with many great example, which I find is a very thought-provoking and would be useful for the EAP countries in developing our policies on services and digital technology for the economic development. And also, I will try to respond to the points as much as possible through my presentations. And I would like today to give the perspective of my country, Thailand, on services trade and digital technology, which will be under my personal capacity and not representing the view of my government. Okay. So for Thailand, services sector are the backbone of our economy and also the primary source of the job creation, which is about like 49% of the overall job. And in 2024, our services sector account for 61% of the GDP, which is very high and is been 4.6% higher from the 2021, which is aligned with the report that the country in our region have a very high growth in the services sector. And sorry, let's do this the previous slide. Yeah.
Joyce to the previous one.
Yeah, and the service sector are the highest account of the GDP compared to the manufacturing sector, which is 30%, and agriculture sector, which is only 8.5%. And our services export accounts for okay, 56 billion US dollar in 23, which is more than double in 2021. As you all know, our key services sector is tourism services, and other top performer sectors are wholesale, retail, financial services, hotel, restaurant services, transportation, health, and recreation services. And last year, we also have high foreign investment. We have a lot of investment application, especially in the ICT sector, like in data centers and cloud service from company like Google's or from Australia, from Singapore. And next slide, please.
Yeah. That's okay.
So in terms of the digital technology, we agree. I okay, I agree with the presentation by Aditya and Alessandro that the digital technology create, productivity, jobs, and access to services, and the service that cannot be tradable can be tradable, and it creates a lot more opportunity for services trade. And Thailand sees the importance of the digital technology, and we also have implemented the Thailand 4.0 policy with the 20-year digital and society development plan to complete our digital transformation by 2027. And in 2024, our digital economy accounts for 23.9% of the GDP. And the three main pillars of our policy is to develop the digital infrastructure, to have the coverage both in urban and rural area, to have the digital innovation, to have the digital manpower with the digital literacy and all the digital skill needed. And to facilitate the digital trading service, we also need good infrastructure. So in terms of financial infrastructure, like according to the World Bank presentation as well, we have a very strong fintech sector, and also the government have adopted the prompt pay, the digital payment platform, to make use of the fintech technology, and this has been widely used in Thailand with the transaction of 1.58 trillion US dollar last year, with the 9% increase year on year. And in terms of the telecommunication infrastructure, we have a very high internet penetration, 91%. 5G coverage is also very high, and I mean, we can say that 100% have access to mobile broadband through 3G, 4G, or 5G, and we also plan to have the auction for the 6G spectrum this year. And the target services sector is for us now is the cloud services, software services, data processing services. And in the year of 2023, the value of the software and all the digital services have reached 17 billion US dollar, and this is a robust expansion of 9% year on year. Next, okay. Coming to the key challenge for Thailand, I can see there are three main ones, and this is also aligned with the World Bank report, which is, Thailand. As you can see from the presentation, we still have a very high STRI score. We still face the regulatory barriers in sectors like telecommunications and financial services, and the common restrictions are like, the foreign ownership cap, Thai director requirements, and other licensing requirements. And the second one, this one I tend to, disagree with you, Haditya, that we still have a skill shortage in our country. And according to what I have do some research, only 1% of the population have an advanced level of digital skills need for intensive skill digital services. And this we also face the aging society population, where the working age population declining from 71% in 2020 to 56% in 2060. And this is a very concerning for our country. And the third one is we have a very concentration on the traditional services sector. Like we are very good in the sector that is not create much value, like retail service, hotel services, restaurant services. And we are very much dependent on the tourism services. And still, like, you know, with the instability of the economic now, we are still not able to recover to the pre-pandemic level. And next one. Okay, sorry. Okay. So my last slide is considering the challenges. I agree with the points that made by the report with regard to the how you have to balance the liberalization and regulation. For us, I think in my country, I think we need to have the strategic liberalization in the sector that we are lacking, or we need more know-how or knowledge transfer, like R&D, environmental services, and ICT services. And in Thailand, we also, in terms of regulation, like we also have a fragmented regulation, and there are a lot of regulation that is unnecessary. So we also conduct the regulatory guillotine to eliminate all the unnecessary regulation to conduct a business in Thailand. And another consideration is that the country must have the regulation with the coming of the digital economy, you know, in terms of consumer protection, data privacy, cybersecurity, data flows. And second one is the skills, like what Aditya and Alessandro say, we need to create the capacity, not only the opportunity. So we need the education reform to align our workforce with the modern services needs. And in Thailand, we also, since we lack of like the digital skill workforce, we also have the digital talent visa to try to attract the expertise in our country. And public and private partnership is also a very important thing. The third one is the services diversification, because in Thailand we have a lot of traditional services. So I think, and maybe in other ASEAN countries as well. So I think we really have to make use of the digital technology and shifting toward the higher value added services, like, you know, professional services, business services, financial services, and ICT services. And to promote the digitally delivered services more, like for us, like health services, we need to make it to deliver like in telemedicine, and to support the platform services, creative services. And the last point is that I totally agree with the World Bank is international cooperation is very important. And apart from our commitment in GATS, we also have the commitment in regionally, which is higher level than the WTO. Like we have the ASEAN Services Trade Agreement, RCEP agreement, and also we have the e-commerce agreements in ASEAN and RCEP. And still, I think WTO is a very important venue for members to discuss all the trade and services and all the emerging issue. We have the work program on electronic commerce that we discuss not only the moratorium, but other relevant issues. And for Thailand, we see the importance of the regulatory cooperation, and we have made an additional commitment on services domestic regulations to facilitate the trade and to promote transparency and predictability of the licensing procedure. So this would be end of my presentation. Thank you.
Thank you very much, Pakuan. Those were very interesting and pertinent remarks. I will not try to sum up anything at this stage. I will just now pass the floor to Gabriel for his own remarks. Gabriel, the floor is yours.
Thank you, Juan. Thanks, Juan, and the Secretariat for the invitation. Massive thanks as well to Alessandro and Aditya for presenting the findings of the World Bank report. I had a thorough read, I would say, of the report. I was telling Juan the first task I did because of all the meetings was I actually uploaded your report to Google Notebook and then did a podcast. So that was my introduction. Some AI was telling me about your report, and then over the weekend I had a thorough read. But it's very interesting. The first point I would emphasize is that I think you make a very compelling case based on data and clear evidence that that policy reforms and technologies um, can be real transformative engines for growth, competitiveness, and also inclusion. And one observation I would have is that this is very much aligned to a lot of our discussions here in the WTO. And of course, WTO and the World Bank produced this very important report on trade and services for development. And now I think we have this initiative which is trying to build on that report. So a lot of the arguments, the evidence, actions required can be found in both this report as well as what we have in this more general report, I would say. So it's not just relevant for East Asia and the Pacific, but I think it's relevant for all members in the WTO, all delegations here in Geneva. So, you know, I know Pakwan did focus quite a bit on the country experience. So I will try to do that, taking into consideration as much as possible, trying to have this intersection between digital technologies and policy reform. So I note in the report you sort of glossed over it a bit. Structural adjustment in the 1990s. You focus very much on recent policy reforms, but in our case, I want to rewind a bit, go back to the 1990s, and we had just newly democratized. We had a situation of a failed industrial policy. We had crony capitalism. We had very difficult national conditions. But through a confluence of factors, we were able to sort of find our footing. I think what you have in terms of your virtuous cycle is a sweet spot, right? You're trying to find where your opportunities and capacities meet. And what we had was some work in the 70s, 80s in creating special economic zones. But what we had in 1995 was the creation of the Philippine Economic Zone Authority, which enabled for service export zones. And this is the genesis, I think, of our business process outsourcing industry. We now refer to it as IT, business process management, knowledge process outsourcing. We have all different types of terms, but the real genesis was, I think, a confluence of factors. You had multinationals trying to cut costs and also streamline operations. In our case, we had, I know you mentioned capacity constraints and education, which is highly relevant today, but we had a relatively educated workforce that was attuned to Western culture and also, I would say educated at that point. So you had sort of the creation of this special, authority, which provided a touch point for investors. And it was our first government institution to offer a one-stop shop for permitting, okay? So I'll turn to it, but we perform quite badly in your STRI index, okay? But I think one observation from looking at the research, looking at some of the case studies, is you have pockets of reform, okay? And I think in our case, PEZA was a big pocket of reform, and that's where a lot of our service investments were channeled through PEZA. They only wanted to deal with PEZA. And I remember we had a director general for PEZA who was in office from 1996 to 2015. And I remember I was with her on a road show in Munich, like, I don't know, 10, 12 years ago. And she was, I think, in her late mid 70s. and she was still going strong. And she was very emphatic in saying that, you know, investors want to go to us because we're a one-stop shop and we don't have any corruption. Okay. So there was credibility. So I think one observation is that, you know, there can be pockets for reform, and then this can lead into broader reform. So, and one point I would add is that we had no entrenched interests in sort of the ICT services field. Um, so what we had was, you know, this emerging sector. It was voice based because you also had the technology coming out. You had the internet. You now had voice over internet technologies. I guess, like, you know, my first touch point would have been Skype, for instance. Um, so you had that sector have a footing on call centers, voice. Um, and that sort of has evolved for us now to include IT services, healthcare, financial services, legal process, outsourcing, and as you pointed out in your report, increasingly digitally assisted or AI assisted business analytics. Okay, so, you know, some top line figures which I'll be referring to, you know, I guess in our country experience, for you know 20 by 2024, our sector generated 38 billion in export revenues, which was up from 35.5 billion in 2023. So there's been consistent growth in this broad sector. Um, and one point that did emerge in your report as well is that it's empowered women, young professionals, it's increased middle class incomes, and has had second order growth in things like real estate, retail, and finance. Um, and you touched on, I think, the case study with Tata about readiness, and this goes to capacity. So I also asked some colleagues in Manila in this field. You know, last week, you know, I'm doing this panel next week. Do you have any insights on how digital ready are we? How AI ready are we? And what they said, it's a mixed bag. You know, I had a colleague who's a CEO for a company that onboards shared service centers, and he said that um, there's probably going to have we're probably going to have displacement happening in customer support, a lot of the voice things perhaps. But he also emphasized that culturally, you know, our workforce has an appetite to upskill. He cited online certifications, and I think what you mentioned, I think maybe what, you know, Pakuan referenced, internal training. So a lot of resources will have to come from the private sector rather than necessarily a public sector in this area for lifelong learning. Um, and you know, I think you know, you referred to the figures on increased productivity, and also the more investments going through being channeled through foreign-owned companies that use these digital technologies. So we've had, you know, increased revenues, we've had increased employment. Um, but interestingly, on the lower value side, we've also had a situation where um, there's been some complementarity. So I think, you know, during COVID, we had a situation where you had a lot of work from home. So you would have customer complaints that they could hear the rooster in the background. So a lot of some of these contact centers are using noise canceling and also uh, neutralizing accent technologies. And that also creates new opportunities from those who may have previously been locked out of employment. So that's one other thing that we would note. Zooming out a bit, you know, services account for 62.2% of our GDP, and it equates to about 58% of employments. I guess similar figures to what we have with Thailand. Um, but you know, I would say that, you know, in the STRI, these are horizontal things that we tend to have, from land ownership restrictions, the need for labor market tests, some localization requirements. But in the report, I do note you refer to our Public Services Act. So we've unilaterally liberalized to allow for full foreign ownership for shipping, airports, railways, expressways, telecommunications, and also ride hailing, you know, like the Grabs, the Ubers of this world. So I do note that, your estimates is that this would increase total factor productivity by 3.2% on average across the economy. And then you pinpoint some downstream things that you mentioned in your presentation. And interestingly, one aspect for us where we have high food prices, so logistics and these knock-on effects are very interesting for us. I think, on telecommunications, which is an enabler, I would also, concur that we've had real challenges with broadband. But I would highlight maybe two policy reforms on this account. One is the PSA, of course, and efforts to increase competition. For many years, we had two dominant players, but we've had now, both for mobile and for broadband, emergence of a third competitor. So, the figures for us are still quite low in 2024. It's 94.42 Mbps speed, average speed, but that compares quite well to 2022 when it was at 62.51. So I think you have some real regulatory effects on performance and competition. And just on this front, I would highlight one other point on a policy we introduced for common towers. Okay, so basically we enabled independent tower companies to build basically this shared passive infrastructure before each mobile infrastructure company would have to operate its own tower network. So because of this, we've had a dramatic increase of common towers from about 1,300 in 2023 to 4,400 in 2024. So it sped things up as well. I note Juan gave me a note about time running out, but so I had something to say about fintech. Here in the WTO, we're working with a lot of partners in advancing discussions on the enabling effects of financial technology and digital banking. So I won't really go to that, but I think overall it does really provide this compelling narrative about members trying to find this sweet spot. And I think to end, just in terms of the role of WTO and regional cooperation, as Paquan also mentioned, sometimes we need policy lock-in. So I think that's the real value, where maybe our commitments may not be as ambitious as what we have unilaterally made, but it ensures that we don't take a step back. So I think that's where we're looking at, and we value the plurilateral work on services, domestic regulation, e-commerce, investment facilitation. So these are things that really need to take a foothold and be integrated into the WTO. And ultimately, I think you mentioned the cycle does not work on its own. We need reform, investment, and also cross-border cooperation. So I think that's where the WTO comes into play. And thank you very much for this report, which is very, very interesting. Thank you.
Okay, thank you very much for those very insightful comments and observations as well. Gabriel, before opening the floor for comments, both here on the floor and through Zoom, I personally thought that one simple but very powerful contribution that the report makes, apart from the data and the evidence-based analysis, is the actual framework to think about these issues, to think that development is where opportunity and capacity meets. And when we see that even from a trade setting like the WTO, I can't help but thinking that those opportunities may actually arise from may lead to trade solutions. So trade can contribute to those opportunities. So, for instance, Paquan, and you mentioned that the importance of skills and how much we usually, for very good reason perhaps, but how much we usually overlook that in a trade environment, but how important it is, skills and education is for for increasing productivity in digitally delivered services in particular, and allow those services contribute to development. And something that Paquan mentioned, which is related to demographics. Societies age. And both the combination of changes in the way we all live through digitalization, digital apps, like Alessandro mentioned, the fact that all our societies are aging, all that, to me, are opening options for trade, and the more one, and the more four, etc. So in several sectors, whether it is professions, whether it is medical tourism, whether it is opportunities that may arise there. And the question of capacity, again, how trade can contribute to countries increasing their own capacity. As you mentioned, it is noticeable that in some of these countries, the foreign companies are the more digital intensive. So they bring these digital technologies to their host market, so that how opening to the foreign investment can actually help these countries or any developing countries raise their own capacity, even to increase their own education levels. So that's also a sector that we should probably pay more attention to as well in a setting like this one. So having said that, of course, glad to, if you have any questions here in the floor or through Zoom, we are happy to take them. Online? You don't have it? Yes, Connor, please.
Thanks to all the panelists for the great presentations. I have just a question for the World Bank. I found particularly fascinating the slide that you had on CPTPP and RCEP, and the comparison between the promise of the trade rules and the actual what was actually happening on the ground. I'm just curious if you could speak more to how you assess what's actually happening. Is that using the STRI? And if not, are there other factors that you consider? Because I think that's something that we sometimes miss here. It's more difficult for us to get that kind of information. And similarly, you spoke of the regulatory fragmentation, I think in the transportation sector of one of the countries, and how multiple ministries were involved in those decisions. Is that type of a situation where a sector may be liberalized, but cumbersome to access? Is that reflected in the STRI, or how is that dealt with in those evaluations? Thank you.
Do you want to answer? There is another question there. Philippe, Switzerland. Yeah, Philippe. We can take that one first. Yeah, we can take that one. Yeah.
Thank you very much to the speakers for really the excellent presentations. Very clear, somewhat amusing, which always helps with the attention spans. First, perhaps as a preliminary comment, but correct me if I'm wrong on this, the statistics I think that the bank presented were statistics without tourism, right? Which would speak to, I think, even how impressive those figures are, because often those figures are pumped by tourism numbers, and here they're not. So I note in passing how impressive those numbers are, if I remember correctly, that they were without tourism. And then my questions, perhaps three, around the theme of a lag. First of all, if you could expand a little bit on policy reform. Where are there the lags? In some cases, is it strategies? Is it at a sectoral level where there are some lags? What are the kind of the best students in the class, the most successful? And then what are the sectors that might be a bit more sticky? The second question, where there is no problem from a policy standpoint for reform, what explains there some of the lags? Is it because of, as you mentioned, regulatory barriers, Aditya, when you said about opaque licensing, or sometimes there are lags because there's a regulatory kind of vacuum that authorities aren't able to keep up with that? Notice that Thailand, in the representative's presentation, talked about consumer protection, data privacy, cybersecurity. Are these areas where there's regulations that are lacking? And then my third question, you only briefly briefly spoke about Cambodia and Laos, but with regard to LDCs relative to other countries in the region, I presume that the skills and the infrastructure challenges are, of course, there, but are they growing faster or lagging behind in comparison to some of the neighbors? Thank you.
Okay, let me take one question from China here, and then there is another one online that I will read out. But yes, please, our Chinese colleague.
Thank you, Kwan. We have two questions, one from me and the other from my capital colleagues. And the question is, things. This is a empirical analysis of, from the regional cases, and China is also part of the East Asia's cases, and we are happy to see that the policies effect to the real trade growths, and we definitely will follow the continuously follow the approaches suggested by the this report, and we will also see the value of the specific suggestions. So my question is for the regional cases. So currently we are at the multilateral platform. We are facing challenges. So we need more supportive efforts from the different aspects. So the question to the expert, that according to your observation, that for example, at regional platforms like either APEC or other regional platforms, what kind of roles they can play to support the multilateral system, and what is the most effective way you think is for their support? Thank you, and I'll pass the floor to my colleague.
Thank you very much. I'm yes from Capital, but I'm asking this question purely on my personal capacity. I always have this confusion on how international organization the methodology they use to measure STRIs. We look at the OECD STRI very thoroughly because we fear there is a dramatic different perception domestically in China and internationally on how China liberalizes its service sectors in China. Our regulators seems to be very confident on how much we progressed in liberalizing our investment market access. We have a negative list on foreign investment in China, and additionally, in recent years, we have another negative list on cross-border trading service. So for establishment, for market access, we have very clear and limited restrictions and prohibitions on entering into the Chinese market. And for regulations, for domestic regulations, there's a tendency for local government to attract foreign direct investment. So it's one of their annual KPIs. When there is a foreign investment coming to China, they provide a tailor-made service. They even send a team to help them to get all the permits, license, if they have all the qualifications in place. So in China, there's a lot of confidence on China's liberalization in service sectors. But internationally, when we look at the OECD STRIs, I must confess I didn't spend time looking on the World Bank STRI, but in the OECD STRIs, we don't score very well in STRIs. Oftentimes, my ministers ask us to explain what is the difference. And we have the same question to you today, especially looking at one of the charts my US colleague just asked. How do you measure the applied status of each country in their international commitment specifically under RCEP and under CPTPP. For instance, when I look at the chart, China's applied measures on RCEP is even higher than what has been committed under RCEP for China. So that means there are certain commitments we haven't fulfilled under your calculation. I really hope to understand how that being calculated. When I look at OECD, I found that there's a tendency that the OECD STRI is modeled on certain economies. For instance, the data flow you said is very important. And we found the OECD data flow restrictiveness index is really modeled on the European way of regulating data flow. And even in China, we have another elective list for outbound data flow in China, but that haven't been taken into account. We're trying very hard to facilitate the outflow of data, but we are using a different model of management, and that result in a very high score in the restrictiveness index. So we are wondering how this whole process has been calculated under your methodologies. Thank you.
Okay, there are already many questions, so I will ask Aditya and Alessandro to address the questions posed now. There are 3 that came through the chat, so I will address them. We will address them later. So let's address these questions so far.
Thank you very much, Juan, and I really appreciate these thoughtful questions. Before I answer these questions, I know some of you will need to leave. I just wanted to show you that this report, I think, is an important report, but it's part of a broader story that we are trying to tell. And there are, in fact, a series of 4 reports which we think of as a technology and development quartet. We would be really grateful if you look at our website, where each of them is already available. But we'll have a series of seminars where we present this. And for example, the questions that Gabriel talked about, what does artificial intelligence mean for all these sectors and for jobs? That is another report that we have already prepared and we're going to present. So having dealt with this commercial, now I turn to your important questions. I think if I can broadly group them instead of trying to answer every one of them in detail. First, I should say that it's precisely these kinds of questions that it would be great to have a deeper conversation, because the challenge of measuring restrictiveness in policy is huge. The challenge in linking changes in policy to outcomes is even bigger. So while we present a lot of evidence with passion and conviction, we should put an important caveat that this is very imperfect work. The measurement work, the causality work, it is primitive compared to the research in other areas which has become more advanced. The STRI measure was jointly developed with the World Trade Organization. It is a joint database. Let me step back for a second and say, there are 3 dimensions of policy. One is the policy as it is in legislation, as it's written down. At the other end is the implementation of the policy. And between the 2 of them lies this one instrument which is particularly important in services, the license. Now, what the STRI focuses on is really policy as it's written down. And that's an answer to Connor's question. It doesn't really deal with other burdensome regulation, which is not explicitly either restricting entry or targeting foreigners. So we miss out on the kind of... now, there is another World Bank instrument, which used to be called World Doing Business, but now is reincarnated as Be Ready. That Be Ready looks at, for example, questions about how many days does it take to get a license? How much do you need to pay for a license? So that is at the other end of the spectrum, which is purely, in a way, you can think of it as the implementation. but the question of how much discretion is there in allocating a license, that is missed out both by the STRI and the Be Ready. And whether it's a doctor or a bank or a telecom company, the license is pervasive, and so is discretion. And this discretion is often legitimate because you need a certain flexibility to deal with difficult situations like data flows, as you said. But the question is, when does that discretion also manifest itself as, in GATT's term, a market access restriction, where you say, I will issue only 7 licenses for banking? Now, is it because you think 8 licenses are going to cause financial instability, or because you want to protect the interests of the 7 incumbents? It's very hard to make that determination. And similarly, it can also manifest itself as discrimination, that I want higher capital adequacy requirements, for example, from, let's say, it's a purely apocryphal example, that the United States says, I would only count local capital towards capital adequacy requirements. Now, what if a European bank says, but why don't you look at my global capital? Now, is that because global capital, the claims on it are weaker than on local capital, so it's a legitimate instrument, or it's a protectionist instrument? These questions are very hard to make definitive determinations on, which is why while we present these measures, I would love it if we had the kind of feedback that you're all providing, which would help us to improve, and also encourage our friends in the OECD that this measure is ideally developed together. A single measure which reflects all our collective understanding of what is the best way to measure, because we don't want proliferation or duplication. So I would love an opportunity for us to work together, but you sit on both places, so you can make this happen. The second point about regulation, and this is especially from Philippe, I think it's a really interesting question of what explains the lag. I don't want to spend too much time, and perhaps it's a subject for a conversation, but when we think of regulation itself today, there are some places where regulation is an impediment in the way that we are talking about. Some places, a lot of global digital delivery, regulation has become redundant. And then there are certain cases where regulation needs to evolve to facilitate reform. The example of, for example, the regulatory differences across jurisdictions in Indonesia is an example where we need regulatory reform. How we deal, and this I think is a profoundly important question, how we deal with regulatory cooperation between countries. Because services are different from goods. When a service comes into your jurisdiction, you cannot inspect it at the border. When a consumer consumes medicine across jurisdictions or puts their bank money in a foreign bank, how do you deal with a question where a regulator in the country where the service provider is located, a bank or Google or any company, is entrusted with protecting the interests of the local consumer? And perhaps sometimes when contracts are concluded in that jurisdiction, the regulator where the consumer is based is entrusted with looking after the interests of the consumer, but often does not have the power to do so because the provider is located in a different jurisdiction. It's that mismatch between power and responsibility which can become a big problem in services. For example, between the US and EU, when data had to flow, it was not a trade agreement that ensured that data flowed. It was first the safe harbor and then the privacy shield, which is an example of this complementary regulatory cooperation which is needed to ensure freer trade. It's not just about you open your markets and I'll open my market. It is, can you reassure me that you will look after the interests of my consumers when I allow your access? And that's why I think the CPTPP question, which is the final thing I'll say, is a very interesting example, that we look at the commitments, but we miss out on some very interesting dimensions of this agreement. It says data must flow, but it also says you must look after the interests of consumers and protect their privacy and protect them from fraud.
It's that balancing act which I think is at the heart of services reform. Sorry.
Then let me just thank the discussant, since you answered to the question from the audience, for the wonderful discussion that Awan and Gabriel gave us, to which I would react in the following way, just saying two things. So one is that clearly, if we all know what to do, the question is how to do it. And so the issue of the political economy of reforming services is obviously a huge issue, and we are here all trying to help policymakers understanding also their constraint. And sometimes what might be less obvious is that timing might matter. So timing reforms in such a way that certain obstacles are less relevant because some prior reform has been undertaken. That could be an interesting venue to think about this dynamic issue of reforming the services sector. The second was the question about, I really like the idea of going back to the historical example that Gabriel gave us with the 90s at the Philippines. And there was a question about past student. I always like a lot to quote the case of the Singapore of the 60s and the 70s, where the key was really this anger for this desire to learn from abroad, looking at the foreign source of possibility of learning with enthusiasm, rather not with fear. And the second thing, to link back to what Juan said in terms of the importance of trade and skill, in the same episode of Singapore in the 60s and the 70s, the awareness that the importance for the future of the country was in upskilling and education was such that teachers in Singapore in the 70s were paid as high as engineers, which is something that in many countries nowadays is really far from being a reality.
Thank you very much. Thank you very much for those remarks, Aditya and Alessandro. Certainly to Connor and to our Chinese colleagues, if you want to further discuss later on these questions of measurements, the STRI and PSTRA, of course, we are happy to continue discussing this and eventually the differences with the OECD index. We are approaching the closing of this session, but the report has elicited a lot of interest even online, so I will simply read out the questions for Aditya and Alessandro to take on board further thinking, but probably the replies to these, as I am looking at them, may come also or maybe found probably in the other three reports as well. So three questions actually coming from Vietnam, Bui Linh Chi. So what is the role of the services sector in Vietnam's economic growth in the short, medium, and long term, especially when Vietnam's key economic pillar, exports, is facing significant risks? Second, what are the three most critical bottlenecks hindering the services sector's contribution to Vietnam's long-term economic growth? And finally, can you give some recommendation for the country as well as the priority order for addressing these bottlenecks? Then there is a question by Eva Vulandari. International cooperation is important to increase skilled human capital. The questions, how to address the gap in the basic infrastructure which related to the education and digitalization so that the international cooperation can be effective. Similar question from Malaysia, someone from Malaysia. What initiatives like My Digital and the Malaysia Digital Economy Blueprint, and how can Malaysia ensure the rural areas and SMEs are not left behind in the growth of the digitally delivered services? A question from Jane Derek Brockman, who is very happy with the report. She says, today, when you summarize your three policy challenges, the first one referred to getting the balance right between trade policy focus on liberalization and focus on regulatory reform, but the report itself drew attention to the need to get the balance right between innovation and regulation, with innovation being fundamental to productivity growth. Might you like to comment on how innovation fits into the picture? Another question from the Philippines on how to address the gap in human capital in the Philippines. And then just a a question on Malaysia. How can Malaysia actually leverage ASEAN to champion digital policy harmonization and service sector liberalization across the region? And finally, do the World Bank have specific recommendations on how and what interventions must be implemented by governments to increase overall agricultural productivity and increase incomes? So again, this goes a little bit even beyond services. Okay, so just to note the type of issues, I don't know if you want to make a final comment, but otherwise we are closing. We are close to closing the session. Yes.
Asymptotically closing.
Exactly. Yes.
So I just wanted to thank the discussants also for the really thoughtful remarks, the questions about skill mismatches, about this whole challenge of policy lock-in, but retaining regulatory flexibility. I think I want to particularly acknowledge the online questions, especially from my friend and the most knowledgeable person, Jane. And I won't take up too much time, but I think that this is a great conversation. We are all deeply grateful to the WTO and to the 50 or more people who are here and the nearly 250 people who connected online. This is the kind of interest and feedback that is reassuring for people who often labor in obscurity. But thank you very much for coming today. And thank you, Juan, Jocelyn, Francine, everybody for your wonderful support. Thank you very much.
And thank you very much to...
And to Maria Laura, who managed this all on our behalf. Thank you, Maria Laura.
Yeah. And of course, thank you very much to the participants and definitely our presenters and discussants. Please let us give them a big round of applause. Thank you very much.